I'm going to show you how I trade crash and boom for almost 100% accuracy. Okay, so first of all, we're going to start with crash 1000 index. All right, on the crash 1000 index market. Now, this is the first thing I do when I want to trade this market for almost 100% accuracy. So what I first of all look at is the position where price is. This is it here on the 1 minute time frame. This is the position of price. Now what I'll do next, since the market just sold at this point, now I saw that the market have bought a little bit. Now I'll go to the 1 hour time frame. All right, now the 1 hour time frame, I'll zoom a little bit here. Now I saw that this market has sold. Okay, now what will happen next is for the market to buy. All right, because if I take a look at this point right here, the market sold at this point, it bought again, it sold, it bought, it sold, it bought here, it sold, it bought, just like that. And now here's a buy and here is a sell, and we are seeing a retest. Okay, just like it's happening right now on the 1 minute time frame. On the 1 minute time frame right now, the market is buying at this point. So what I will do is to wait until price has dropped on the 1 minute time frame before I'm going to place a buy. Okay, I'm going to place a buy because right now price has the oversold. Okay, but there's still going to be another spike that's going to come into the market before placing another buy. But first of all, I'm going to put in my indicators which I use. I'm going to put in the relative strength index and the average true range indicator. So I'm going to put on the RSI period 14, levels 10 and 90. Why at this point here for sell and buy for the description. Now I want you to know that this setup is for crash alone. Okay, when on the bull market, I'm going to put on the parameters as well. So I just put here the color is going to be on red, then the style is going to be on 4 pixels, the color is going to be on blue. Click on done at this point right here. All right, now the relative strength index, color for the style red, pixels 4, then you click on done at this point. Okay, right here. All right, now I'm going to put the average true range on indicator window 1, the average true range, to style on 3 pixels, color red, then I'm going to put the period on 14, the level is going to be just 2, while the style here is going to be on 2 pixels, the color is going to be on blue. Okay, just like that, you apply to all time frames and you click on done. Okay, now this is pretty simple strategy that I used to trade. We're going to be using the third zoom level. So you zoom out, then you zoom in. When you zoom in, you count 2 because the last point of the zoom out is already 1 zoom level. So you zoom in twice after that. So 1, 2. So this is the third zoom level as I use it, right? I'm using the third zoom. Okay, now we see that whenever the average true range goes above, that's when spike comes into the market. If you take a look at this point here, there's a spike, right? When it's going upwards, when the average true range is an upward trend, that upward trend, when it goes upwards, immediately there's a spike. So the best possible entry point, the best good entry point for me that I normally use with this strategy is when price is below, okay, this point. After the spikes, then I immediately place a buy. But before I place a buy, I always check where the price is, meaning price action. Okay, I check where the price is at the market before I place my entries. So if price at the overbought or at the oversold, if I see that there's a high liquidity on the market and the market is going to crash, I avoid placing the buy or a sell at a point whereby I know that this market will go the opposite direction and I will end up losing my trade. Okay, so I just confirmed that during this point here, there's a spike at this point, and if you trace it downward, you can see that it's a very long spike, and the average true range went above the level of 90. Then when I see a good opportunity like this, I just place a buy for 5 candlesticks. Okay, well, because this is a long sell, same thing as this here. This is a very long spike on the market. When you see a long spike like this on the market, and you saw that here price is, if you zoom out a little bit, you see there's a long spike at this point. Okay, at this point right here, and the market is a good opportunity to place a buy because the spike is very long. With short, whenever you see a long spike on the market, there's a higher chance that you can take about 5 candlesticks or 10 candlesticks for your profit on that market, because the spike is a very long spike. So the market need to make back that profit. Okay, the market have spiked, means have sell, so you need to make back that level. The market need to buy upwards at a given point to that sell level. I hope you understand what I'm saying. Okay, when markets sell for a long period of time, there's a higher chance the market will buy for a long period of time as well. But when the market buy, when the market have been buying for a long period of time and you enter into the market at that point, know that the market is going to sell. Just have that in the back of your mind, because the market have already been buying for a long period of time. So there's a higher chance of a spike. If you are in a position whereby the market have been buying, you just come to the market and the market has been buying, there's a higher chance that that market will sell at any given point in time. So you want to avoid that type of market as soon as you can. So you don't place a sell. Okay, you could place a buy to catch the spikes. All right, you could place a buy to catch the spikes. While I like counting my candlesticks, scalping the market, right? So these are things I watch out for. All right, these are things I watch out for. So I just confirmed that there's a long sale at this point, so there's a good opportunity. I'm going to place a buy at this point. Place a buy at this point right here. So this is how I trade normally. Okay, then same thing I here. There's a long spike on this market. Take a market spike a little bit. I'll place a buy. Place a buy. If you take a look at it, this is not a very long spike. So maybe I'll place a buy for about 3 candlesticks. Then another long one, you place another short buy. And even though the spike come into the market after 3 candlesticks, I won't be that afraid on the market, because I know I'm going to make my profit back from that loss on that trade. So I'll check the higher time frame. The higher time frame here, market is selling on crash 1000 index. Market have sold, so the market will buy. We're seeing a buy. Okay, if I zoom in here, you can see that this looks like an inverted hammer or a hammer pattern here. So this is an inverted hammer. Whenever there's an inverted hammer, the market will retest like this. The market retest for a sell, and we're seeing here this is a hammer pattern. So we're seeing that the market will buy. If I go to the 1 minute time frame, the market is already buying on the 1 minute time frame. So these are things I want to watch out for. And if you look at it, remember I told you guys that the spike is going to come into this market soon. Let's look at it. Spike came into this market. Now the markets are oversold, so the market is going to buy. So I have full confidence that I can place a sell at this point in this market. Okay, so these are things you need to watch out for when you're trading. And the average true range indicator helps me see when there's a long spike on the market. So if there's a spike here, I immediately place a buy at this point. So you want to make sure and be careful where you enter your trade. Do not enter your trade carelessly. If you are the oversold, you place a buy, you are full confident that the market will sell. At the oversold, you are full confident that the market will buy for a particular period of time. Okay, now this is for crash 1000 index. We're going to boom 1000 index market. All right, on the boom 1000 index market, we put the latest trade index. Let's see if we can use this same setup for this strategy. But remember, it's not just the setup alone. You need to know how to calculate how to analyze. Technical analysis is very important when you're trading the boom and crash market. So these are things I watch out for. Okay, and these are things I'm very good at. Technical analysis on boom and crash. I always analyze perfectly before trading boom and crash market. I analyze my trade perfectly. So here right now, the market have sold. So what we're going to be expecting on this type of market is a buy. All right, it's a buy. So here at this point right now, see right here at this point from here, so the market have sold at this point right now. So the next step is for a spike. So we just saw a very big sell, so the next step is for a spike. Now we want to confirm this. So what we're going to do is to go to the higher time frame. If I zoom in a little bit, all right, very good, very good, very good. Now see, here is a sell. The market sold from here to this point before it retested for a buy. You can see it start buying now. Start buying. We'll go to the 1 minute now. The market is selling here, right? But the 1 hour time frame is already giving us a signal that spike is coming into the market. Okay, so if I'm in the market right now, like if I'm in a trade now, I'm currently using MT5. So assuming that I just logged into my account right now, this is what I will see. So what I'll first of all do is to analyze properly, going to the higher time frame to check, doing my analysis using the indicators to see and wait for a good opportunity for when I'm going to place a buy or a sell. Now I just confirmed that at the higher time frame the market will buy because the market has been selling for a particular period of time, and right here the 1 minute time frame the market is selling a little bit. Now I'm going to wait after the spike comes into the market before I'm going to place a sell. And that sell is not going to be for a very long time because I'm going to be scalping the market, taking advantage of small price movement from that market. Now the reason I'm not going to be spending much time on the market is because we're seeing the zone here almost at the oversold position. This is it, almost at the oversold position, right? And we're seeing a very big spike coming into this market, meaning that the market is going to spike. The market need to go upwards because when it gets to the oversold, it need to go back to the overbought. All right, so the market just sold here, the market just bought here, it sold a little bit, you need to buy again, then you're going to sell a little bit and buy again, sell a little bit, just like that. So these are things I watch out for to have a successful trade, almost 100% accuracy. All right, so I hope you understand what I just said in this video, and I hope it helps you learn how to trade perfectly on this crash and boom markets. Okay, in the next video I'm going to give you more awesome tips and strategies on how to trade. All right, so I will see you guys on the next video.